Let's start off with the Zim mining index. We're seeing quite a bit of weakness coming through there. We know that Rio is also one of the laggards on the stock market. What is predominantly driving down the Zim mining index, and do you think we could see a recovery going forward?
Thank you, Len. I think the drop today pretty much is your direction, I think, soon after the month end. I think what we've seen is, I think investors are really taking a cautious look as we start off a new month, and they're pretty much trying to see if they can get bargains. But the drop really was way down by, I think it was as a result of the drop in Rio, which came down about 16.67%, and it's one of the largest weights in that index.
Do you think that Rio is going to start recovering from these levels onwards, and given the fact that it's had such a significant drop, do you think that investors are going to view it as a value stock?
I think the key issue around Rio is the resolution of their capitalization issues. I think once that is resolved and it's public, I think we should see a strong recovery in the price. But as it is right now, I think people are really, I think the investors are still watching and waiting for the information and waiting to see what direction it will take in terms of decisions around the capitalization of the company.
Let's touch on the likes of Econet, also dragging the main index further. This stock has also been under the spotlight. It has also been one of those laggards.
Yes, Eleni, but as you can see, just like Rio, I think it's the beginning of the month, and you can see that drop is really on the back of very tiny volume, I think, and it's pretty much people trying to get in at a bargain. It came down to 391 cents, but on the back of 1,600 shares. There's still strong demand in the counter, and as people await the results, which we expect to be strong, and they should pay a dividend. But you see the price there coming down today is pretty much on the back of the beginning of the new month.
Let's also touch on the likes of Barclays. We know that this company has dropped in profitability, coming through at $1.4 million, and that's after tax. Barclays relatively flat after releasing these full year numbers. Is there a lot of optimism and positivity that these banking stocks are actually going to perform quite well going forward? Clearly no real movement to the downside after this news.
I think we should see pretty much a flat performance in maybe from all the banks, and Barclays mainly. I think the jump there you find it came from the non-funded income, given their very big book. I think deposit book. They've got a very huge base, and they were able to recover from their loss on non-funded income. On the funded income, they didn't do so well. I think it was very little. I think compared to the non-funded, it was 25 million from the non-funded, and 9 million came from the funded income.
Let's also touch on Turnal. We saw that this company released results, revenues up around 52%, operating profit up around 40%. But we did see a margin squeeze coming through, dropping to 8% from 10%, costs increasing as well. But these are very good numbers. It's really tough to actually come through with some negative news. I mean, revenue up so dramatically. Do you think that the net margin decrease can be recovered in the next period?
I think so, but it's also dependent on a few issues if they are corrected sooner. I think in terms of their value system, we've seen that they've been missing out in terms of their raw material. They're now getting it from Brazil, which is very far away from here, and it's coming at a cost which is double the price they'll pay if it was coming from the local market. And if that is corrected, and the mining, the company that mines locally for the same product starts operating, they should see their margins going up. But at the moment, we should see a strain on that sort of on their margins. And also, one of the things that we need to watch carefully in Turnal is their borrowings. I think they come in with a huge borrowing of, I think the short-term borrowing, I think we're at 12 million, and they're coming in at a blended cost of around 14%. So that cost, if it is corrected, I think we should see their margins, I think, coming up as well.